And I would like to invite Jake Jennings, Chair Tech and Trade Practice at Basilinna, to the stage to moderate the next panel discussion and ask that the panelists also go to the stage.
Better picture. Yeah. Thanks, Christy. And I want to thank CSI for yet another wonderful summit. Great attendance. Especially, I want to also thank the staff. So Casey, Elsa, Kim, great job, and the rest of the staff. You guys, I know you stayed up late last night and the night before and the night before. So thank you for all of that. So, and then Christy, great setup for this panel, having Steve and the discussion on USMCA. I think we're past review. Is it a review or a renewal, renegotiation? We're going to jump straight in. I've got a great set of panelists, Sofia, Pérez, Gasque, Director General of AMITI. We've got Brad Smith, Chief International Officer, American Council of Life Insurers, and Lauren Mandell, Partner, Wilmerhale, and the negotiator of the ISDS CHEP. No, I won't get into that, Lauren. We could get into that later. And I'm going to kick it right off because, Sofia, I know you have a plane to catch. So just as a scene setter, as we approach the USMCA review, how is your organization or sector assessing what's working well? What changes may be needed? Are there specific areas of your membership that continue to encounter practical barriers to trade?
Okay, thank you. Well, first, thanks, Christine, Elsa, everyone. We are the Mexican Association of Technology Industry. We represent the 5.5 GDP in Mexico with technology companies, US-based, European-based, and Mexico-based companies. So we represent all these companies, and now we are facing, I think it's not now or 2026, the renewal or the renegotiation. It has been since last year. So I support what Guillermo was telling us as the private sector in Mexico, technological private sector in Mexico. We have been here for 2 years working with our peers, with ITI in US and Tech Nation in Canada. So we have been working to be synchronized all the private sector technology companies and putting all these inputs in the CEO dialogue, in different momentums of the conversation of US, Mexico, and Canada. And also we have been working inside of our organizations with the government of each country. As AMITI, we participate in different tables with the Economy Minister, Marcelo Ebrard, and the Subsecretary Rosendo, because we know services is important. We don't represent hardware, but we have companies that also, as HP, EVM, Cisco, has hardware and semiconductors. So it's important to be in sync with all the chambers of electronic in Mexico. But we have been working in 3 areas, main areas. Services as a strategy for the development of the country. Second, how we can make Chapter 19 available for EI and also cybersecurity. We know it's really important for all the region, cybersecurity, and how we can make it better as a region. So we have been working in 3 main areas with our peers in Canada and US, but also with the government in Mexico. One different aspect that in the last time of NAFTA and the change for USMCA is that now we have different sectors in the room next door, del cuarto de junto. In the last time, El Cuarto Junto was only 1 or 2 chambers, the big chambers in Mexico that were represent, and different industry, but not all the sectors in Mexico. So now the Minister, Marcelo Ebrard, has separate by sectors. So AMITI is letting the technology sector and the negotiations and the information we have been having these small roundtables of different priorities as cybersecurity, but also small, medium enterprises and the priority in services, EI, and all the strategy. So that's one of the things that we think that this change is better for us in the IT services sector. The second that we think now it has to change, but is now the same, is to have these informal committees now only in IT sector, because we have been pushing with ITI and TechNation, but it's a non-official committee. But we think governments has to be looking cybersecurity and AI like regional strategy, not only by country. So that's one thing that we are looking for change, and we are pushing on that. And the third is the importance of services. In Mexico, this had been a strategy, a big strategy to impulse and develop semiconductors, but like the hardware side. So AMITI has been pushing an IMEX and rules and initiatives for law to impulse and to develop services, specialized services and talent for software development. So that's another thing that we think is changing. We are pushing, we are making these roundtables with the government, and we, different as the last administration, we have better communication now. So that's one thing we have to change. And as AMITI, we are eager to keep working with Canada and US so we can have this big strategy of North Latam together. So
And my compliments on the room next door.
yeah.
I'm hearing very positive results, not just from the members, but also from the organizations and some of the think tanks in DC. So congrats on that.
Yeah, and I think now with the sector part, we are going to have a lot of now different perspectives, because we think now UMCA has to be focusing in services specialized. Yeah.
Brad,
Thanks.
let me turn to you. You know, what are the opportunities you see and what's working and what's not?
Well, in the first place, we were included in NAFTA. So NAFTA opened the market for us. Prior to that, there'd been a limit of 30% foreign ownership. So it opened it to 100% subsequently within a relatively short phase in. We're actually, I mean, our members are dominant in the market. I mean, US companies acquired local companies and through joint venture arrangements and then bought up over time in equity to provide most of the capital in the market. Mexico's done a good job of implementing the opening of the market. USMCA was built on it. And the main value added was the digital inclusion, which we hadn't had. We hadn't either had problems or we hadn't had a need for anything, but it was a nice value added. But at the time, there was another change that I think subsequently we're probably regretting, which was there's a financial services committee that was scheduled under NAFTA to meet every year. And it became as needed under USMCA. And the first 3 years, we were asked whether it was needed or not. Last 2 years, they haven't gotten around to it. And you know, there are generational changes in the trade agencies. We have not had a market access or a national treatment issue in Mexico that hasn't been resolved. And the real value of NAFTA, and something we learned and subsequently was included in pretty much every FTA since then, is a financial services committee with an automatic meeting requirement. And the cadence of that keeps up, you know, a mechanism to have discussions, because it's hard scheduling 3 financial services regulators and trade regulators. And in the United States,
Issues don't go away.
well, they change. I mean, in the United States, we have, you know, the additional complication of, since NAFTA went into force and then subsequently, you know, renewed under USMCA, we have state regulators. And they haven't been involved in the USMCA process barely at all, because it hasn't occurred. COVID kind of suspended it. But they serve as a useful mechanism. And we have an issue right now that is not only impacting us, it's impacting the domestic market, and we're engaging at the request. And we started asking for trade assistance in terms of convening a financial services committee meeting about 2 years ago. And we engaged the Commerce Department of the Biden administration, sent a letter to the finance minister. It's about a rule of law issue about a tax assessment that's being imposed retroactively. And it would lead to insolvency of specific lines of business in the market. The French have actually brought a binding arbitration case and have gone public criticizing it. Spain, Switzerland, we've requested there be a financial services committee under the USMCA. We hope it'll get resolved. It requires political level intervention. And since the Trump administration is still putting under sub-cabinet people in place, there's really nobody to convene it. So we're at an inflection point, but it's a major issue for us. And Mexico just adopted a fundamental change in their judicial system. And this involves litigation and involving like 18 companies. And we're not sure whether the judges stay the same judges or whether they shift to newly elected people, and if so, whether these people are qualified in arbitration case. So they're just stability issues for us. That the certainty of a financial services dialogue really helps. That's one thing we've learned. I mean, that's my main takeaway. I won't take more time.
Thanks. Lauren, what are you hearing from, your clients?
Thanks, Jake. We have clients that have interests across the USMCA, services, digital, financial services, insurance. I think I'll focus in my 2.5 minutes on one.
Go 3.
Area. 3, oh great. On EPS, on electronic payment services. EPS is an engine of economic growth and inclusion, both in North America and more broadly, enabling transactions online and in person, et cetera. In the USMCA, I think the view is that it is a very strong agreement on paper. When you look at the digital chapter, financial services, and in some respects, it was breaking new ground in guaranteeing national treatment for cross-border transactions, market access. I emphasize on paper because with respect to Mexico in particular, I think the implementation has been suboptimal, to say the least. Even today now, 5 years after USMCA, US EPS companies in Mexico can't process domestic transactions using their own rules and protocols, their own special sauce. And so I think there's a view that the promise of USMCA on paper maybe hasn't been met, at least now. On USMCA, there are other provisions on data transfer and data localization that are critically important for, I think, everyone in the room, including EPS companies. It is also notable that in USMCA, Mexico did agree to a pretty broad kind of scope definition of what is EPS, including not just the processing and clearing of transactions, but also transactions that are adjacent to processing and clearing around fraud protection, around loyalty programs, tokenization, and others. But again, with Mexico, if you can't use your own rules and protocols to process transactions, all the other stuff is not all that important. They haven't enacted these rules, and so they're not getting the benefit of market access. I think in terms of what can be done in the review process, I think for every subject matter, here there's a combination of kind of capturing what is good in the agreement on paper, securing implementation where the paper is good, but the implementation has been suboptimal. And then there's the question of, what can be done that is new, if at all. Again, I think on the preserving what is good on paper, preserving national treatment and market access for EPS is critical. Preserving data flows and data localization akin to the original agreement is critical. Implementation, again, I think 5 years is far too long to wait for the market access to be realized for US EPS suppliers. And so, the regulators have to draft rules to enable US companies to operate in the market. And then, I mentioned value-added services around, for example, fraud prevention, fraud protection, trying to get secure a kind of scope that is consistent with or even broader than in the original agreement. And then maybe lastly, and I'll pause after I say this, in terms of new things, at the lunchtime discussion, Christy mentioned the US-UK negotiations under Trump 1.0, where there was, I think, really valuable forward thinking around EPS and progress that was achieved around standards, for example, technical standards, around regulatory independence. There's a chance to kind of build upon that progress in the review here.
Well, one of the things that Brad brought up, and I think we heard earlier from our discussion with the congressional staff, is, it's one thing on paper, as you mentioned, but it's another to enforce it. Given the, concerns that have been expressed from the judicial changes in Mexico with the constitutional amendments, the election of judges at all levels, questions on expertise, background, the issues you raised, Brad, there's arguably a limited, narrow opportunity in USMCA for investment disputes. Something called a covered government contract, limited to certain sectors that, have to have, arguably a high capital entry. Lauren, you were heavily involved in the negotiating of the investment chapter. Like, based on what you saw in the negotiations, the politics of it, and then the actual issues we're seeing now in real time, and what's your view of ISDS in the review and renewal?
I told you we'd get back to this question.
Yes.
No,
I had to ask it, by the way.
It's an important issue. In some respects, 5 years out, it's what we expected, in the sense that, we negotiated fairly strong rules, legal protections, but we left ISDS weakened. No ISDS with Canada. And as you say, with Mexico, having this unusual two-tier structure where, some investors theoretically have full access to ISDS if they have a covered government contract in a certain sector, including some services sectors, whereas other investors, most investors, have at most access to what we called skinny ISDS. And so, no indirect expropriation, no fair and equitable treatment, and you have to jump through hoops even to get to that. I think, and so 5 years later, we sort of reap what we sow, in a sense, where we have a number of, I think, unresolved and maybe unresolvable investment issues. The insurance issue that you mentioned, Brad, could be hopefully resolvable, but right now unresolved, and partly because there is not, I think, effective access to ISDS for really any companies in Mexico, because I mentioned the sort of two-tier structure, as you did, Jake. It's turned out that very few, if any, companies have the special key, have the special contracts. And for those companies that don't, the notion of skinny ISDS, but also having to jump through these hoops. And one of the hoops, which has become, I think, extraordinarily relevant now in light of the judicial reforms, is that in order to access this skinny ISDS, you have to litigate in the courts of Mexico for 2.5 years. And given, I think it's too early to say, is there going to be a material impact on the independence of Mexican courts just a week after, the first of several elections? But I think the concerns, I can say from our clients, the concerns are substantial. Again, both in terms of how do we even get to ISDS, but also even if you're not interested in ISDS, when you live in a world of courts where the independence is really questioned, and then you don't have a backstop like ISDS, how do you meaningfully resolve disputes? If I have a minute more.
30 seconds.
30
I gotta get
seconds.
to Brad.
Okay. I'll say that I do think there is an opportunity in the review, more so with respect to Mexico probably than Canada. Canada, probably not in the cards getting back to ISDS, but with Mexico, I think that the fact that the sort of reality on the ground has changed because of the judicial reform. It's also not just the judicial reform, right? You lose autonomous independent agencies, competition, other areas. So I think there is an opportunity. I think there's a question of, do U.S. stakeholders want to prioritize this issue in what will be a grinding fight, right? Just like 5 years ago. Lastly, in 5 seconds, I do think that when you look at what the administration has said around investment protection and ISDS, I do think that there are glimmers. There are I don't want to say an open door necessarily, but there are glimmers of possibility. We understand from the negotiation of the sort of template in the Liberation Day negotiations that there is a provision on investment protection. You look at statements that Ambassador Greer has made in the Congress, including in QFRs maybe 2 weeks ago or a month ago now, in response to a question from Senator Warren around ISDS. And he did not take the Catherine Tai approach and say, no mas. He said, we don't want these tools to be used for offshoring jobs in manufacturing. So services, energy, other areas, I think it was a kind of signal, right, that, we're open to the conversation.
It was one of those, be careful what you ask for, Senator, but we'll see. Brad, a lot of focus is on Mexico, but are your members, seeing any issues, concerns in Canada, or is that kind of a template for going forward?
Well, actually, Canada's an open market for us. There's been a change in global insurance regulations. So depending on your business line, the more lines of business, the more countries you're in, the heavier your regulation. So companies try and pick strategically. And Canada already has very heavy domestic competition. So it's not a major market for US life insurance companies. It's more US auto. And I don't believe they have any barriers. There've been a couple of cross-border issues over time, like especially on fire coverage and like exchanging damage inspectors, bilateral coordination on forest fire prevention, stuff like that. That's one of the important features of the financial services dialogue. It allows for regulators to have a mechanism to do that on a regular basis where it's already scheduled 2 years in advance. So it's been useful over time. And, COVID disrupted that with every country, but the administration and the trade officials are just restarting them. They've begun the one with Korea. They're starting with Mexico. We're hoping we'll get back in the cycle. It was just disrupted because of travel restrictions.
Yeah, I think that's one of the unsung benefits of those standing meetings is that, there's a meeting coming up. You can put your issues, have a conversation, and hopefully resolution. So I want to thank the panelists for joining me today. And Christy, over to you.
Thanks so much to Jake and Lauren, Brad, and Sofia for that very, very useful, insightful discussion on the private sector perspective on USMCA, both on current issues under negotiation and the USMCA review.